You walk into that home improvement store on a Tuesday morning. The greeter smiles at you, scanning your items. She's probably 70 years old, wearing an orange apron, standing for 6-hour shifts. You think to yourself, good for her, staying active in retirement. What you don't see is the financial disaster unfolding behind that smile. That part-time job she took to help with expenses is actually costing her $8,000 this year. She doesn't know it yet. Most retirees don't figure it out until tax season, when it's already too late. If you're retired or approaching retirement and thinking about picking up some part-time work to pad your income, you need to hear this before you fill out that first application. What seems like common sense earning extra money can trigger a cascade of penalties and benefit losses that leave you worse off than if you'd never taken the job at all. The government doesn't exactly advertise this trap, and employers certainly don't warn you about it during the interview. Let me tell you about George. He's 64, lives outside Atlanta, and thought he was making a smart move last year. His Social Security check was $1,700 a month. And after paying his bills, he had maybe $300 left over for anything beyond basic survival. No vacations, no dinners out, barely enough cushion for an unexpected car repair. So when his neighbor mentioned that the local hardware chain was hiring seniors for cashier positions at $15 an hour, George jumped at it. The job seemed perfect. 25 hours a week, no weekends, friendly management. He calculated he'd make about $19,500 over the year. Combined with his Social Security, he'd finally have some breathing room. He could take his granddaughter to that amusement park she'd been begging to visit. Maybe even replace his 12-year-old truck. George worked that entire year. He showed up on time, never called in sick, became Employee of the Month twice. Then, April came around. His tax preparer sat him down with a printout that made his stomach drop. That $19,500 he'd earned had cost him $4,000 in reduced Social Security benefits. The Social Security Administration has this rule nobody really explains clearly. If you're receiving benefits before your full retirement age and you earn more than $22,320, they reduce your benefit by $1 for every $2 you earn over that limit. But it gets worse. George's income pushed him into a higher tax bracket. That extra income got taxed at 22% instead of 12%. Between federal and state taxes, he paid an additional $1,200 he hadn't anticipated. Then there were the subsidies he'd been receiving for his health insurance through the marketplace. His income had been low enough to qualify for substantial assistance. Once his earnings pushed him over the threshold, he lost $2,400 in premium tax credits. He had to pay that money back. Let's do George's math together. He earned $19,500. Lost $4,000 in Social Security benefits, paid $1,200 extra in taxes, owed $2,400 in subsidies he had to repay. His actual gain from 1,300 hours of work, $11,900. That works out to $9.15 per hour, not the $15 he thought he was making. If you factor in the gas, the wear on his car, the work clothes he had to buy, and the physical toll of standing for 25 hours a week at 64 years old, he probably netted $7 an hour. George isn't unusual. This happens to tens of thousands of retirees every single year. They see that hourly wage, multiply it by their hours, and think they understand what they'll earn. They don't factor in the Social Security earnings test. They don't realize that the additional income will affect their Medicare premiums 2 years later, through something called IRMA, the Income-Related Monthly Adjustment Amount. 1 year of part-time work can increase your Medicare Part B and Part D premiums for years afterward, if it pushes your modified adjusted gross income over certain thresholds. Here's what triggers these financial penalties. Any job where you receive a W-2 form gets automatically reported to Social Security. That means traditional employment retail, food service, office work, anything where you're an official employee will definitely count against you. Self-employment income over the earnings limit counts too. If you're driving for a rideshare company, delivering food through apps, or doing freelance work, and earning more than that $22,320 threshold, you're in the penalty zone. Gig work has exploded among retirees in the past 5 years. It seems perfect. Flexible hours, work when you want, be your own boss. But every dollar those apps report to the IRS counts toward your earnings limit. I've talked to Uber drivers in their late 60s who had no idea that their side hustle was reducing their Social Security check month after month. They thought driving 10 hours a week wouldn't matter. They were wrong. Now, not all income counts against you. This is crucial to understand. Investment income doesn't trigger Social Security penalties. If you're receiving dividend payments from stocks, that's invisible to the earnings test. Rental income from properties you own doesn't count. Pension payments don't count. Even distributions from your 401k or IRA don't count as earned income for Social Security purposes. The system specifically targets money you earn from working, not money your investments generate, or money from retirement accounts you funded earlier in life. So what do you do if you legitimately need extra income? First option, wait. If you can possibly hold off on taking that job until you reach your full retirement age, which is 67 for most people, reading these penalties disappear. Once you hit full retirement age, you can earn $10 million a year, and Social Security won't reduce your benefit by a single penny. The earnings test evaporates completely. If you're 64 or 65 and thinking about working, every month you wait gets you closer to that penalty-free zone. Second option, and I'll be straight with you about this, cash work. It's legally gray, sometimes crosses into problematic territory, but it's extremely common among retirees. Babysitting for neighbors and getting paid in cash. Handyman work paid under the table. Selling crafts or baked goods at farmers markets without reporting every transaction. I'm not advocating tax evasion, but I'm telling you what actually happens in retirement communities across the country. When the system penalizes you for trying to survive, people find work. Third option, volunteer strategically instead of working for pay. Many organizations offer perks to volunteers that have real monetary value. Museums give free memberships. Theaters provide free tickets. Some community organizations offer meal stipends or transportation reimbursements. You're not earning taxable income, so there's no penalty, but you're receiving benefits that would have cost you money otherwise. A retiree volunteering 20 hours a week at a food bank might receive a weekly food box worth $60. That's $240 a month in value without triggering any Social Security reduction. Fourth option, consulting work with business deductions. If you can structure your income as self-employment, you can deduct legitimate business expenses before calculating your net earnings. A retired accountant doing tax preparation can deduct software, office supplies, a portion of home, internet, and utilities. Those deductions reduce your countable income. Someone who grosses $25,000 but has $8,000 in legitimate business expenses only shows $17,000 in net self-employment income, keeping them under the penalty threshold. Fifth option, and this requires precision, earn exactly up to the limit. $22,320 is the magic number for this year. If you can track your earnings carefully and stop working the moment you hit that threshold, you maximize income without triggering penalties. This works best with flexible jobs, where you control your hours. The problem is, most employers won't appreciate you saying you can only work until November. They need to stop for the year. The real solution, the one nobody wants to hear, is that our system is broken. We tell seniors they should work longer, stay active, remain productive members of society. Then we penalize them financially for doing exactly that. We reduce their Social Security benefits, increase their Medicare premiums, strip away their healthcare subsidies, and push them into higher tax brackets, all for the crime of trying to earn enough money to live with basic dignity. Martha is 71 now. She's past her full retirement age, so she doesn't face any Social Security reduction. She earns $12 an hour, about $9,300 a year. Every penny of it goes into her pocket without penalty. She wishes she'd known about these rules when she was 63 and took a job that ended up costing her more than it paid. She tells every younger retiree she meets to wait if they possibly can. Before you take that part-time job, run the numbers. Not the simple multiplication of hourly wage times hours worked, but the real calculation that includes Social Security reductions, tax implications, benefit losses, and increased Medicare premiums. Ask specifically about the Social Security earnings test and how your projected income will affect your benefits and subsidies. The home improvement store is still hiring. The orange aprons are still there, waiting for retirees who need extra income. Just make sure you understand the true cost before you put one on. That $8,000 mistake is real, it's common, and it's completely avoidable if you know the rules before you start working.